What's going on, everybody? It's November 18th, 2022, Daily Log episode number 55. And today we're going to cover S&P 500 futures contract and the price action that unfolded and some of the things I annotated throughout the session. So let's start with the morning analysis. I was originally kind of highlighting a couple areas. I was highlighting the buy side liquidity, and then I was also annotating how on the 4-hour time frame we were returning back into a premium and this premium for value gap. So that was set up a scenario where potentially we could go short. The reasoning why I was annotating the buy side liquidity was mainly due to the daily time frame and the weekly time frame. How we were yesterday, we touched down into that bullish fair value gap, closed above the premium end there, and then the weekly time frame we were tapping into the bullish order block. So on the higher time frame, it was suggesting bullish, but when you drop down to a 4-hour, even a 1-hour, it just didn't seem as if we were going to expand higher. And knowing that we were on a Friday, I was expecting at least a retracement back into the weekly range. I said in the morning log, I highly doubt we even reach up into the buy side liquidity, just due to the fact that it was a Friday, no news drivers, likely to kind of stay sideways, which we did get a couple good opportunities. Let's dig down into the 1-hour. So the 1-hour time frame, we ran out the buy stops. And then, like I said before, we ran into the 4-hour for value gap. So that was kind of our narrative going into it. Was, for me, I wanted to see how we reacted after we ran the buy stops. So I didn't get a chance. And this kind of just comes with personally my style. Would I have liked to short here? Yes. But due to the higher time frame, I just had a conflicting kind of analysis today. I didn't know whether we were going to be bullish or bearish coming into the session. I wanted price to kind of prove itself. So if you guys remember a couple of days ago how I was talking about when you're looking for the YouTube model, you kind of want that confirmation setup rather than, and again, this is all personal. This is just me. You could have went short here. The risk was not very high, and this is right at the open. But for me, I like to see this type of move play out and then kind of enter in on the second stage or the, kind of second entry. Because for me, this is confirming bearish prices. It's confirming what I already was kind of leading to believe. We ran out the buy stops, returning to that premium, and I was just kind of waiting for price to prove itself. Because I've had plenty of setups before where I've entered in here and then price continued to rally. So once price broke underneath the low here, I immediately was looking for bearish setups. So I annotated this setup here. This was really nice if it did happen, but this for value gap just acted as a breakaway gap, which is perfectly okay. And then something from my studies today, and even, obviously years of studying this concepts, market maker sell or buy models. And ICT used this today and taught it how you can use the other side as potential entries. So he was using a balanced price range here, which I believe, if you look at the low here, we just barely tapped it. But we came back up into that discount low. We extend that out in time. So once we trade through this, it can come back up into it. It shouldn't exceed 50% of that area. Okay. That could be your entry pattern. And that's the reason why price never returned back into this fair value gap resting here. From that low to that high there. That's originally what I was looking for. Then price ultimately dropped lower. And if you extend out this area in time, this is where ICT entered in on, which this is more advanced. This is something that even for myself is not optimal. I don't trust myself to use this just yet, but it's a very cool study. He was actually using, I believe, the 15-minute time frame. Let me zoom out here real quick. So he was using this fair value gap resting here, which would be your balanced price range. And he entered in on the 5 minute somewhere inside of that area. So it's just a cool study. I don't think that I'm personally going to use it for a long time unless I get extremely comfortable with it, but it's cool to see in how price, actually uses real support and resistance versus what retail thinks works. So if we dig into the entry that I had today, once I saw price displace lower, let me reel this back. We were left with this 5 minute fair value gap. And I was annotating how we should see sell side resting at 39.43 be tagged. That was my draw on liquidity, which was resting here, 39.43. Reason being, that's the original consolidation of the market maker sell model. So that's where all these sell stops are resting. Original consolidation, accumulation, reaccumulation, another stage, then you have your smart money reversal, low risk sell, and then we ultimately displace lower. So I was looking at this fair value gap resting here on the 5 minute. And even coming into the day, I even stated in the morning log that I wasn't really looking to trade today. Reason being, I've already met my weekly objective. But I thought this was a decent opportunity, so I put on a pretty low risk trade. Price returned into a premium, and then I went short. And all I was looking for was seriously 5 points. And some people were questioning me, like, why would you do that? And this is simply off of what ICT's son has been doing, and ICT has, talked about it on his Twitter a few times. Well, actually a lot. And I think that's a really good model because even 5-10 points, if you're consistently able to capture that every single day, that can add up to a lot over time. People just don't think about it like that. They think, oh, 5 points, 10 points, that's easy. Everybody, especially me in my earlier stages, I was trying to do these one shot, one kill type of setups where I was going for 50 when I was trading Forex. I was trading, targeting 50 pips, 75 pips a week. And then I kind of realized if I just focused on maybe 10, 5 points, 15, 20, and I just lower my overall expectations, I started to find a lot more consistency rather than trying to push for, a large percentage every single week. And personally, that's just my style. I like being in and out of the market. I don't like spending way too much time in here. And again, this is all just personal experience. This is what I like doing. I'm not saying you should do it, but it works for me. So when price displaced lower, I was up around 5 or 6 points. I pulled out of my position. I was going to leave a runner on just for purposes of, keeping the trade on for you guys, but price was spending way too much time inside of this area for me personally. I mean, 5, 10, 15, 20, 25, 30, 35 minutes inside of this fair value gap, which I typically don't like. I want price to reach up into that area and displace lower fast. So that was not a good sign for me. And I was a little concerned because if you look at the 5 minute dealing range, if I go back here, I'll just go here. At the time when I was taking the trade, the dealing range high was from this high here down to the low. If we go down to like a 2 minute, price returned into a premium. But if you look at the 15 minute, at that time, 15 minutes has still not reached up into the premium. So I was just a little concerned with that. But I knew overall we should probably attack the sell side first before returning back up into this area here due to this being a market maker sell model. And ultimately we got the objective 39.43. So just tagged it there. As you can see here, I stated 39.43 at 9:04 a.m., which was here. So not too bad for government work, as ICT says. Overall, it was a great week. Conditions are getting pretty sloppy, as you can see, and this is due to us nearing the end of the year. We have Thanksgiving next week, and then we have Christmas, New Year's. So I believe the next kind of few weeks here are going to turn very sloppy and not very fruitful. As you can see, even on the daily time frame, we've kind of stayed in the same area 1, 2, 3, 4, 5, 6 days now. So it's kind of tipping its hand that you're going to see very consolidation, seek and destroy profiles. Those conditions I just don't really want to be participating in. I don't really feel like risking capital for it. And that's the reason why I took out so early today. I could just already feel that the markets are wanting to go sideways, and I don't want to be caught up inside of that. There's no reason. I don't want to spend mental capital sitting sideways inside of a trade. Um, so I think that's going to be it for today. Um, as far as next week, I may do a couple videos, but like I said, we're ending the year here, so I don't really want to continue with these videos and stuff. So I'll update in the chat what's going to happen with the Telegram and YouTube going further. For those asking about one-on-ones, I'll create something next week's where we can figure it out a little bit better. So until tomorrow or this weekend, I'll talk with you guys. Be safe, good luck, and good trading.